When you've spent a lifetime building, protecting, and growing your savings, you understand something most younger investors simply don't. Money is not just numbers on a screen. It's years of effort condensed into a form you can hold. It's your choices, your sacrifices, your discipline, your patience. And as you approach retirement, or live within it, that understanding becomes sharper, almost instinctive. You don't look at your nest egg the way a 25-year-old does. To them, it's abstract. To you, it's concrete. It's your past, your present, and your future, all at once. So when the world begins shifting in ways that feel like they're moving faster than ever, it's natural to pause and ask, is my strategy still built for the world we're entering? And when it comes to gold, that question becomes even more important. Because gold isn't like stocks, bonds, or cash. It behaves differently, responds to different forces, and serves a different purpose. And right now, as we approach 2026, that purpose is becoming clearer than it has been in years. You see, every generation goes through periods where the world seems to tilt on its axis, moments where the old financial rules don't quite apply, and the new ones haven't fully revealed themselves yet. We lived through the 1970s inflation surge, the dot-com bubble, the 2008 financial crisis, and now we're living through another shift. The difference this time is that the pressures are coming from many directions at once. Inflation may look like it has cooled, but the lived reality tells a different story. Government spending has reached levels few would have imagined even a decade ago. Political instability doesn't seem like short-term noise anymore. It feels long-term, structural, and deeply embedded. International trust in the US dollar is not what it once was. And markets are fluctuating in a way that suggests deeper uncertainties beneath the surface. For retirees and near retirees, these aren't just headlines. They're signals. Signals that the future might require more stability, more tangible assets, and more protection than the past. That's why gold is capturing so much attention right now. Not because people are panicking, not because they're chasing hype, but because they're recognizing that gold's role in a portfolio is becoming essential again, not optional. And that's why adjusting your gold strategy now, before 2026 solidifies these new global trends, is something worth considering carefully. But what does adjusting your strategy actually mean in a practical sense? It doesn't mean betting everything on gold. It doesn't mean abandoning stocks or selling your home or pulling out of the market entirely. It means recognizing that the financial environment you're entering may reward those who balance their portfolios with assets that don't depend on government promises, corporate earnings, or market speculation. Gold is one of the few assets that has stood the test of time across every empire, every currency crisis, every recession, every political shift. It has no CEO, it pays no dividends, it produces nothing, and yet it holds value because it represents safety when uncertainty becomes the norm. As you age, the role of safety in your financial strategy changes. A 30-year-old can afford to be patient through downturns. A 40-year-old can still ride out volatility. But a 55-year-old, a 65-year-old, a 75-year-old, your timeline looks different. You don't want to rebuild after a crash. You don't want to take unnecessary risks. You don't want to wake up one morning and find out the market has wiped out a decade's worth of gains. You want clarity. You want protection. You want preservation. And that's why so many people in your age group are revisiting gold right now, not to chase returns, but to secure stability. Different age groups approach this concept in their own way. For people in their 50s, gold often acts as a hedge. You're still building wealth, but you're much more aware of risk than you were in your younger years. You're thinking about the next chapter. You're thinking about what the world will look like when you retire. You're thinking about what will remain solid, no matter what happens in the elections, in the markets, or in global politics. For people in their 60s, Gold often becomes a balancing tool, a way to smooth out volatility and give yourself confidence that part of your wealth isn't tied to Wall Street's daily swings. For people in their 70s and beyond, gold becomes a stabilizer, a quiet, steady anchor that offers peace of mind when the world feels unpredictable. Risk tolerance also plays a major role. Conservative investors often find comfort in gold because it doesn't behave like high-volatility stocks. Moderate investors often use gold to complement diversified portfolios. More aggressive investors often hold gold as a hedge, so they can take higher risks elsewhere without feeling overexposed. That's why the question isn't simply, should you own gold, but does your current gold strategy match the world you're entering and the stage of life you're in? And that world is changing fast. Inflation pressures remain embedded in the economy. Government debt is at historic highs. Interest rates are up and down in ways that challenge traditional planning. The dollar is facing competition in global markets. Supply chains are shifting. Geopolitical tensions are rising. Even the pace of technological disruption creates financial ripple effects. In environments like this, gold tends to move differently, more steadily, more predictably, more consistently. And that's exactly why experts are projecting that heading into 2026, gold will likely play a larger role in retirement strategies than it has in many years. So when we talk about adjusting your gold strategy, we're talking about making sure you're not underexposed if prices rise further, and you're not overexposed in a way that creates unnecessary risk. It's about matching your comfort level with the realities of the market. It's about preparing, not reacting. Some people prefer a gradual approach, buying a little at a time, slowly building their position. Others prefer making strategic adjustments in larger steps. Some prefer holding physical coins and bars. Others prefer accounts where the gold is stored professionally. Some want gold as a small part of their portfolio. Others choose a more substantial allocation. The key is that the strategy matches your goals, not someone else's. And this is where the conversation often shifts toward practicality. Many retirees and near retirees understand the value of gold, but they don't always know how to buy it, how to store it, or how to integrate it with their retirement accounts. That's why companies exist that specialize specifically in helping people understand the mechanics. Companies that provide education, walk people through the process, explain the differences between coins and bars, between physical ownership and custodial storage, between taxable accounts and retirement accounts. One of the well-known companies in this space is Augusta Precious Metals. A lot of retirees hear about them because they focus on helping people understand how to purchase physical gold or silver for personal ownership or for retirement accounts like gold IRAs. For people who feel overwhelmed by the steps, companies like Augusta can explain how everything works, not to tell you what to choose, not to give you financial advice, but simply to provide clarity for those who want to invest in gold but feel unsure about where to begin. They provide educational materials, customer support, and step-by-step guidance for people who want to explore gold but prefer not to navigate the process alone. And whether someone chooses Augusta or another provider entirely, the important point is that people who want to hold physical gold do not have to figure it out in isolation. There are companies whose sole purpose is to explain the process clearly, so retirees can make informed decisions based on their own comfort levels, not guesswork. Because that's really what adjusting your strategy comes down to. Clarity. Clarity about your goals. Clarity about your timeline. Clarity about your exposure to currency risk, to inflation risk, to market risk. Clarity about what helps you sleep at night. When you have clarity, the decisions feel easier. When you don't, they feel overwhelming. So imagine yourself a year from now, 2 years from now, on the other side of whatever changes 2026 brings. Imagine looking back and knowing you made thoughtful adjustments at the right time. That you didn't let the noise of the world scare you, but you also didn't ignore the signals, that you made choices grounded in experience, wisdom, and foresight that you protected what you built. Because the truth is, the people who navigate uncertain times best aren't the ones who chase every trend. They're the ones who pay attention to the fundamentals. And gold is as fundamental as it gets. No one knows exactly what 2026 will bring, but we do know that cycles repeat. We know that debt matters, inflation matters, currency stability matters, geopolitical tensions matter, and we know that gold has stood strong every time those pressures have converged. So now is the time to reflect honestly. Does your current gold strategy fit the reality of the world ahead? Does it match your comfort level? Does it reflect your goals? And if not, is this the moment to adjust? Not dramatically, not urgently, but wisely. Because the most valuable asset you have right now isn't gold or cash or stocks. It's the ability to choose, to prepare, to act before the world forces your hand. And that is what will carry you through 2026 and beyond, with confidence, stability, and peace of mind. If you would like to know more about the current situation regarding precious metals, feel free to watch another video on this channel. I really hope you find all these information helpful. Have a great day. Goodbye.